Hey guys, Chris from Adapt Tuition here, and in this video, I'm going to show you the solution for question 3 from the Jan 2010 PoA Paper 2. If you want to see the solutions for the other questions on this paper, I'm going to put a card up there and a link in the description below. So be sure to check those out as well. And with that said, let's get into the question. Okay, so they give us a nice little opening paragraph here. The trial balance of Beck-Hammond showed that the credit totals were greater than the debit totals by $2,570. So we know when a trial balance doesn't agree, a suspense account is opened for the difference in order to get the trial balance to temporarily agree while we look for and then subsequently correct the errors. Mr. Hammond draws up his profit and loss account, his income statement, which shows a net profit of $15,750. He later discovers the following errors. Okay, so we have a list of 5 errors here. Let's take a little read through. So the first one says, a purchase of furniture for $1,500 cash had been debited to purchaser's account. Now, when you buy furniture, that's supposed to go in the furniture account. The purchaser's account is only used to record purchases of stock. Okay, the next error is a payment of $2,000 by check had been made by customer Ronaldinho, whose account was correctly credited, but the amount was entered in the bank account as $200. Okay, so that's a one-sided error where the debit entry and credit entry are not equal. So we're going to need a suspense account for that for sure. Next, the third item says a discount allowed to Fergie Alexander of $256 was debited to the discount allowed account as $236. Oh, okay. So the amount put into that account only was incorrect. That's another suspense account item. The fourth error, goods with a value of $3,700 sold to Russell Smith had been debited to Dwight Smith's account. Okay, well, that's an error of commission. The wrong person's account was used, so we don't need a suspense account for that. That's a straight general correction. And finally, a check for $375 drawn on behalf of Terry Henry had been credited to his account. Okay, so you might be wondering, well, what does that mean? Well, we'll get into that when we come to actually correct the error. The first thing they want us to do is to draw up the suspense account and correct the errors that have caused the difference in Beck-Hammond's trial balance. It's only 5 marks, so we're going to pull up a suspense account here. Now, before we go any further, if you are not familiar with how suspense accounts work or how to use them, I'm going to put a card up there and a link in the description below. So be sure to check that out. Again, if you need to, 1, be introduced to what a suspense account is and how to use it, and 2, shore up your skills, because some people know what it is, but they're not too sure how to use it or why it works. So that video up there is very comprehensive, and I would actually suggest you check out the entire errors playlist. It will be very helpful for questions like these. Okay, so back to what we are doing now. So first things first, we are going to put into the suspense account the difference as per trial balance. In the opening paragraph, they told us, right, that the credit totals were greater than the debit totals by $2,570. So if your credit side is greater than your debit side, you're going to need an item on the debit side in order to make it equal to the credit side. So in other words, your suspense account is going to have a debit balance at start. Right, balance as per trial balance, $2,570. Now we're going to enter the items, the errors that would have caused this difference to happen. Now the first item, the first error was a purchase of furniture had been debited to purchases, right? It's an error of principle. That's one of the 6 or 7 types of errors according to how you count yours that do not affect the agreement of the trial balance. So we're going to use the general journal to correct that item. And we won't need a suspense account to do it. Now, the second item, a payment of $2,000 by check had been made by customer Ronaldinho, whose account was correctly credited, but the amount was entered in the bank account as $200. So first of all, if a payment was made by a customer, right, it means the customer paid us, so we received the check. So if we receive the check, our bank account is going up. And since bank is an asset, you were supposed to debit bank for $2,000. Now it said we correctly credited Ronaldinho because that was the credit to accompany the debit to bank. So debit bank, credit the customer who paid us. But we credited Ronaldinho for $2,000. That's what it says. It was correctly credited. But the amount entered in the bank account was $200. Now, if the amount you're supposed to debit was $2,000 and you only put $200, you did not put enough. As a matter of fact, it was too low or understated by $1,800. $1,800 being the difference between the correct amount, $2,000, and the amount that was actually used, the incorrect amount of $200. So, 2,000 minus 200 is 1,800. That's the amount of the understatement or the deficit, I guess you could say. But I would prefer to use understatement in the context of errors. Now, it means that the item on the debit side was too small by 1800. To fix that error, we have to go and put the 1800 on the debit side. So half of this entry, the correcting entry, will be to debit bank for 1800 because it's missing the 1800 it should have had in the first place. But every debit needs a corresponding credit. What account are we going to use for that? Are we going to use Ronaldinho? No, because his account was correctly credited. The question told us that. That's where the suspense account comes in. The suspense account facilitates the correction of errors that affect the trial balance by giving them an account to facilitate double entry. So we're going to see the credit on this side saying 1800. Now, a lot of people, when they see this is the credit side, they can correctly identify the credit side of an account. But they see a name saying bank and they say, well, sir, that's a credit to bank. And I have to say, no, it is not a credit to bank. This credit is in the suspense account. And the details column says bank because that is the other account affected by this correcting entry. And in bank, on the debit side, you would actually see the word suspense account written in the details column and the same figure of 1800 there. That's not a debit to suspense, that's a debit to bank. And it indicates in the details column suspense is the other account affected by the transaction. Well, the correcting error, sorry. Okay, so again, the credit to suspense account is what we use to help facilitate correcting the error where the amount put in the bank account was short by 1800. We're going to debit the bank, credit suspense, right? Okay, the next error that affected the trial balance was this one here. A discount allowed to Fergie Alexander of 256 was debited to the discount allowed account as 236. Now, discount allowed is an expense. When we incur the expense, you debit the expense account. And it says it was debited for 236. But the correct amount should have been 256. So again, just like in the previous error where the debit entry was too low, that's what's happening here. So when we correct it, we have to debit that same account again. We have to debit discount allowed. But what account do we credit? Do we credit Fergie Alexander? No. Fergie Alexander's account, as far as we know, was correctly, the transaction was correctly entered in there, right? They didn't tell us anything was wrong with it, and we can't assume. So what other account? Again, that's where the suspense account comes into play. So the difference here is $20. The difference between the correct amount, 256, and the incorrect amount that was actually used, 236. So we're going to go on the credit side of the suspense account and enter $20 there. And we're going to put discount allowed in the details column because that was the other account affected by the correcting entry. That was the account where the error existed. Okay, we have another error here. So this one says goods with a value of $3,700 sold to Russell Smith. Right, have been debited to Dwight Smith. Okay, that's an error of commission, so we're not going to worry about that. That's a simple general journal entry correction with no need for the suspense account. Now we have a check for $375 drawn on behalf of Terry Henry had been credited as okay. When you draw a check on behalf of somebody, it means you've written a check with their name on it, so you are paying them money. Now remember, we are Beck Hammond, and clearly we are paying Terry Henry. So when we pay somebody by check, our bank account is going down. Since bank is an asset, you'll have to credit the bank account and you'll debit whomever you are paying. So we were supposed to debit Terry Henry, but it was credited to his account. Now, here's this. So we know because it's a one-sided error, we are going to use the suspense account. But it's not just going to be $375, and I'll tell you why. One, if we were to just debit Terry Henry's account for $375, we'd be correcting the error where we put the item on the wrong side. Cool, we'll counterbalance it, it'll be cancelled. But we were supposed to debit Terry Henry in the first place with $375. So there's a credit that shouldn't be there. If you put your debit, it's going to cancel off. But then you're still going to be missing the initial $375 that was supposed to go there. So what we do is we actually have to debit Terry Henry's account for double the amount. Once to erase the incorrect credit and once to enter the amount as it should have been correctly entered initially. So in total, you're going to see $750. So of course, if you're debiting Terry Henry, you need to credit another account. And again, that's where the suspense account comes in. So you'll credit the suspense account for $750. Now, there are no other errors, that affect the trial balance. And if you were to add both columns, what you'll see happening is that the totals in both columns will be equal, which means there's no balance left to be carried down or dealt with in the suspense account. So we have dealt with all of the errors. Okay, that's A part 1. Let's take a look at A part 2. All right, so they're asking us to draft the general journal entries necessary to correct the errors which do not affect the suspense account. So I think that was item 1 and item 4. Item 1 was the error of principle, right? So before we jump into it, again, I'm going to put a card up in the corner to carry you to, I think, that specific video, either the video or the playlist that'll show you how to deal with that type of error, right? I broke up the errors playlist into, I think, 5 or 6 videos because I don't like to overstuff videos, and I also don't like to just kind of browse through things and give you one item. I do examples and give you guys stuff to try because I think that's how you really learn effectively. Again, just my opinion, but if you want to, check out that video and come back here. However, if you feel comfortable and you want to continue watching here, let's proceed. So it says a purchase of furniture for $1,500 cash had been debited to the purchaser's account. So when we make a purchase of stock or inventory or goods or merchandise, you'll definitely debit the purchaser's account. What are we buying? We are buying furniture. Furniture is not inventory. It's not stock. So therefore, the purchaser's account should not have been involved in this transaction. What were we buying? Furniture. Furniture is itself an asset. If you are buying furniture, the amount of furniture you have is increasing. And to record an increase in an asset, you're supposed to debit the asset account. So we were supposed to debit furniture. We didn't. Instead, we debited purchases. So we have a missing debit and a debit that shouldn't be there. So we have a couple of things to do. One, we have to put in the debit that should have been put in the first place. And the second thing we have to do is undo or counterbalance the debit that was made in error. So in the general journal, of course, we make our debit entries first, we make our credit entries second, and we indent the credit entries relative to the debit entries. So, like I said, the debit entry will go first. Furniture account is going to be debited because that account is the one that was supposed to have been debited in the first place, but wasn't. And we're also going to credit purchases. Why are we crediting purchases? Because a debit was made to purchases that should not have been made. In order to erase it, delete it, or counterbalance it rather, you have to go on the opposite side of the account and enter the amount you want to get rid of. And of course, we'll put a little narration to correct an error of principle, right? So that's where the wrong class of account has been debited or used, right? The class of account here, purchases, is an expense, furniture is an asset, right? Or again, you could just simply think of it as the wrong account that is not a personal account, that's in somebody's, the wrong person's account, which we're going to see now because now we're going to take a look at item number 4, which is where goods with a value of $3,700 sold to Russell Smith had been debited to Dwight Smith's account. Okay, so when you make a credit sale, you do debit the debtor and credit sales. So we sold goods to Russell, but we debited Dwight. They are the same last name, so we could see the reason for the mix-up. So what do? Again, we have a debit that should not be there in Dwight Smith's account, and we're missing a debit to Russell Smith's account. So we have to go and put the debit in where it should have been put in the first place, and go and counterbalance or kind of erase, delete, however you want to phrase it, the debit in Dwight's account that should not be there. So again, when you are correcting or when you are making general journal entries, generally you put the debit entry first. So we're supposed to debit Russell here because we were supposed to debit Russell in the first place, but we didn't. We debited Dwight. So to fix that, we have to put the debit where it should have gone, Russell's account. And we're going to credit Dwight. Why? Once again, because we put a debit in Dwight's account that should not have been there. So to counterbalance that or to get rid of it, you have to go on the opposite side of the account and enter the amount you want to get rid of or counterbalance. And a little narration will say to correct an error of commission. That's where you have put the item in the wrong person's account. Okay, that's it for A part 2. Let's take a look at A part 3. So they're telling us to draw up a statement to show the revised net profit. Okay, let's go back up to the errors themselves. Actually, no, sorry, the first paragraph. They're telling us here that the net profit was $15,750, and then he dealt with the errors, right? Now, before we get into the correction, the actual solution, I'm going to put a card up there, which will carry you to my net profit correction video. Now, that one I worked pretty hard on. I put some nice little fancy features in it to help you understand why things work the way they work. I actually do up like a whole income statement and show how when each item changes, either increase or decrease, what the ultimate effect on net profit will be. So if you're not sure, you're kind of shaky on how correcting net profit works, right? Or why certain corrections will affect net profit in the way that they do, I will strongly suggest for you to watch that video and then come back here. If, however, you do have a familiarity with correcting net profit and you feel comfortable, let's proceed. Now, again, the first thing we're going to put in here in the statement of revised net profit is the current net profit of $15,750 because, of course, we want a starting point, right? So profit as per income statement. Okay, next, so let's take a look. So, a purchase for furniture of $1,500 had been debited to purchaser's account. Okay, yes, this is definitely going to affect net profit. So, the purchase of furniture is capital expenditure, buying of a non-current asset. Now, that itself, the purchase itself, does not affect net profit. Depreciation will. But if we put it in the purchaser's account, purchases is an expense. We see where it goes in the cost of goods sold section. So, that whole $1,500 was deducted, and it shouldn't have been. So what we have to do is we have to actually add that back. So when let me explain again, right? So the $1,500 was put into purchases, which of course was then used as an expense in calculating net profit. So we would have deducted the whole purchases figure, which should have been $1,500 too high. So when we correct the purchases account and remove $1,500 from it, purchases will come down. If your expenses come down, your profit goes up. So we are going to add back the $1,500 to the profit figure as the correcting entry here. Okay, item 2 was a payment by check to Ronaldinho. Okay, so this wasn't an expense, so it's not all revenue, so it's not going to affect the income statement. Next, we have a discount allowed to Fergie Alexander was debited to the discount allowed account as $236. Okay, discount allowed is an expense. And we put in a figure that was $20 too small, which means when we went to calculate net profit, we would have deducted the discount allowed figure, which would have been too low. So when we correct that issue and increase the expense, what's going to happen? Profit is going to go down. When expenses go up, profit goes down. So you're going to see that item, that correction being deducted here. And what were the other things, boy? Let's see. I don't think there was anything else really, you know. The goods with values 3,700 sold to Russell have been there. Okay, so no, this wouldn't have affected profit. The sales account was not affected. It was just the person's account. And then the final one here, a check for $375 drawn on behalf of Terry Henry. No, so that's an error in the personal account. It wouldn't affect the net profit. So all we have to do now is do the arithmetic and arrive at the corrected net profit of $17,230. Okay, so that's it for A part 3. Let's take a look at part B to this question. All right, so they start us off by saying Laura Bryan has a large number of debtors. She keeps a control account in her general ledger. On March 31st, 09, she extracts the following information. So we have a nice little table here with a bunch of information. So we're not going to go through all this now. Clearly, they want us to do a control account. So that's what they're telling us down. Prepare the debtors control account for March 2009. 6 marks, eh? Okay, so let's pull up that table. And the first thing we're going to do is we're going to populate the opening balances. So it says that the opening sales ledger debit balance is $5,030 and the opening sales ledger credit balance is $620. So the $5,030 will go on the debit side of the account. The $620 will go on the credit side of the account. Okay, continuing on now. The first item after the balances we're seeing is credit sales. Now, credit sales is the major transaction we have with the debtors. That's the reason why they are debtors in the first place, because we sold them goods on credit. So we are going to have to debit the control account. Because when you sell items on credit to people, they end up owing you more money, which is an increase in an asset. And to record an increase in an asset, you have to debit the asset account. Okay, now the next few items will all go on the credit side because they all represent decreases, right? Now, of course, if you want to check out my control accounts video, I'm going to put a card up there and a link in the description below. So be sure to check it out if you need to. If not, well, let's just continue, right? So cash and checks received, 47.1. So when people pay us back, that's what the cash and checks received represent. When they pay us back, they are reducing the amount of money they owe us, which of course is a reduction in an asset, which is going to require a credit to the asset account. So you're just seeing cash book instead of cash and checks received. You can put cash and checks received or just cash book or receipts from debtors. Doesn't really matter. Okay, next we have bad debts written off, discounts allowed, and returns in. Okay, so bad debts written off. If we know we're not going to collect money from a specific debtor, we can no longer regard it as an asset. We have to remove that amount from the asset account. And to remove an amount from an asset account is basically decreasing the asset balance, which will require a credit to the asset account. Next, we have the discount allowed. So that's where we literally tell the customer, hey, you don't have to pay us as the total amount that you owe us. We are reducing the amount you have to pay us. So we are reducing our asset, which of course will require a credit to the asset account. And then the returns inward. So that's when customers send goods back to us. If they send goods back to us, do you think they still have to pay for those goods? No. So when they send the goods back to us, it means that the amount that they have to remit is going to go down, which means the debt or the asset is going to go down. So that's going to require a credit to the asset account. All right, the next two items. So dishonored checks. So dishonored checks That's where the customer initially paid us, which you can see on the credit side here. So we would have recorded a reduction to the asset account. But a dishonored check means that something was wrong with the check and we ultimately didn't get the money, right? Maybe they forgot to sign it, maybe they put an incorrect date, maybe the digits of the amount payable didn't match the words, or some other error. Maybe there wasn't enough money in the person's account when the bank went to collect the funds. So whatever the reason is, when we receive a dishonored check, we have to go back and debit the control account or debit the debtor's account, because again, we thought we received the money which would have been put on the credit side here to show a reduction in the debt. But because we did not actually receive the money, we have to go and put it back to say, hey, you actually still owe us this because we didn't get it. Okay? All right. And the last item to go in the control account before we balance off is interest on overdue accounts. So when customers don't pay on time, there may be a clause in the contract that says, hey, what? If you don't pay on time, we're going to charge you interest on the amount overdue, which is going to increase the amount they have to pay us, hence increasing the debt or the asset, which will require a debit to the asset account. Now, there's no more information to go inside of the control account. So what we are going to do is we are going to balance it off. How do we do that? We add up the items in the debit column, add up the items in the credit column, and subtract. The items in the credit column will have a larger total than those in the, the items in the debit column will have a larger total than those in the credit column, which means the balance will be carried down from the credit side. The totals will be equal, and then ultimately the balance will be brought down on the debit side. All right, there's one last part of this question here. It says, state one reason why Lara Bryan prepares a control account for debtors. So I'll give you two. One is to double check the accuracy of the double entry in the sales ledger. And two, to summarize the entire ledger. I mean, suppose you have a debtor's ledger, a sales ledger with 50, 100 individual T accounts. And you need to know, well, how much money am I currently owed? Are you really going to go through and balance off 50 accounts, 100 accounts? I mean, ultimately, you will have to do it eventually. But a summary account, that's what a debtor's control account is, will help us to do that a lot more quickly. So it saves time and helps check for any errors. And that's the end of this question. Okay, guys, so there you have it. That's the solution for question 3 from the Jan 2010 PoA Paper 2. If you have any questions about it, please feel free to leave them in the comment section below, and I'll get back to you when I have a chance. If you want to check out any more videos, I'm going to put some cards up here. Don't forget to subscribe, and be sure to check out my website where you'll find some pretty useful POA handouts. Anyway, guys, as per usual, thank you so much for watching. Take care of yourselves, and I'll see you next time. Bye.